work for a company called Frost Sullivan. For those of you that are not aware, we're an international consulting and advisory company. Been in the market for about 50 years. We've got 40 offices internationally, and our African office is located here in Cape Town, South Africa. I'm going to take a bit of a different stance with regards to what I'm speaking about. We've been hearing a lot with regards to project-specific information. I'm going to take a bit more of a high-level approach and talk within the African context how the energy market is currently diversifying going ahead over the next 10 years. Within the context of Africa, as we've been told all day, is that there's significant opportunity. The GDP growth of the continent as a whole, as previously mentioned, is expected to be increasing at over 6% for the next 20 years. Although there's a rising middle class and we're seeing a lot more domestic consumer spend within markets, a large majority of this economic growth is still going to be driven through raw material extraction and eventually beneficiation and industrialization following that. The development of these economies will obviously, because of this, be largely linked to the development of the energy and power sector. Now, not just the development of this sector, so not just the addition of capacities to the grid, which many governments have been focusing on at this point in time, but also the diversification of these capacities in terms of the technology used, as well as in terms of the market, with regards to publicly owned generation capacity, as well as the introduction of the private sector into these various markets. Now, the reason I say the diversification with regards to technologies and your generation mix, as we call it, within the variety of different countries, is for a variety of reasons. Essentially, firstly, it provides greater reliability. Majority of South African, or rather not South Africa, but African countries, are still largely linked to a singular feedstock within their countries. Within Central Africa and Eastern Africa, it's still largely linked to hydropower. South Africa is still at the moment a majority coal power, 80 to 90%. Even economies such as Mozambique, which is almost entirely linked, about 100% to hydropower, as well as Namibia. So the diversification away from a singular feedstock for the inclusion of technologies such as coal power, such as the development of renewable power in many markets, not just South Africa. Taking a look into East Africa, which Yujano was speaking just now with regards to the introduction of refit tariffs as well as government subsidies. Kenya has established for quite a few years now their refit program and their preferential refit tariffs within that region. So over the next 10 years, we're expecting to see a more diversification and movement away from traditional feedstocks that are used for electricity and power generation. Furthermore, as I've mentioned beforehand, taking a look at the promotion of renewable power going forward, I think it's important to understand before I move forward is, why is renewable power being implemented within Africa? We don't contribute a significant amount to the carbon emissions globally. However, we're still implementing, not just within South Africa, but within smaller developing countries, the access to renewable power and the development of renewable capacity. There's a significant amount of increased funding internationally with regards to green funds that are supporting and growing renewable energy mechanisms within these countries. The development of renewable energy allows for a greater degree of remote electrification. Traditionally, speaking earlier, we investigated the costs associated with powering a country through temporary power, such as diesel gensets, and the extreme operational costs that are incurred by these companies. There are current investigations into the development of hybrid systems for renewable power combined with diesel power, or complete renewable power initiatives that are powering your remote infrastructure from an ICT perspective and from your other broad spared infrastructure, as well as from your smaller communities that from an off-grid application for renewable power development. Furthermore, I think a larger driver for renewable power within the market is the ability to create a new market and for the development of the localization and job creation potential. The structure of the current integrated resource plan within South Africa going ahead has been structured in such a way in order to promote the development of localization, the development of local assembly plants, the development of manufacturing facilities. We've seen examples such as IWEC, which has already opened its doors in Cape Town for the development of wind turbine blades. as well as a multitude of expansions from your PV sector. So the development and the opening of a new market allows for the expansion of localization and job creation procedures throughout Africa. Furthermore, outside of renewable power, we're seeing, particularly within South Africa, a movement towards a decrease in emission-intensive technologies, primarily within the Southern African perspective, where we're focusing on gas as well as your nuclear power creation. Obviously, our nuclear power development is about 9,600 megawatts as allocated by the IOP within South Africa, beginning in about 2023. It's going to be interesting taking a look at the revised, if there are revised allocations, in the new revised IOP document expected to come out next year, so how that impacts that. But definitely within the Southern African region, the movement towards emission-free technology such as renewable power is still obviously a commitment that's being upheld by particular governments. Now, outside of your technology mix that's currently diversifying and the integration of your private sector into a multitude of these markets, which in a large degree, when we take the renewable market, particularly within North Africa and East Africa, is really driving the implementation of renewable power, as well as at the present time within South Africa. We also get the diversification from the development of private sector for own use. Within Southern Africa, as I said beforehand, Namibia and Mozambique, as well as Botswana, Zimbabwe and South Africa, have all been largely linked to a singular feedstock for electricity production. Now, as we take a look at Mozambique going forward over the next 10 years, we see high intensity end users such as Vale or Riversdale, and the implementation of coal-fired generation facilities within the Moatize region, or Benga concessions that they're using for their own consumption, as well as trade of electricity to South Africa, which is in desperate need at the moment of current capacity. Above and beyond that, we see new discoveries within the market that could potentially promote the development of more diversified feedstocks from both your private sector as well as from both your public sector. We spoke earlier about the development of Mozambique's gas industry. Recently, Mozambique discovered an estimated reserves of about 52 trillion cubic feet of natural gas from Anadarko and Ina off the coast of the southern coast of Mozambique. Now, the development of these fields is expected in the long run to lead to the development of further infrastructure, such as your liquefied natural gas facilities, which are currently being developed by these companies, as well as investments into your OCGTs or your CCGTs, the development of electricity generation from natural gas power. Discoveries off Namibia's coast with regards to 8 to 11 billion barrels of crude oil is also expected to jumpstart infrastructure development from the development of refining capacity, as well as the further development of gas capacity. One can see the development of the Kudu gas to power facility that's being developed within the Walvis Bay region, and the expansions beyond that. So for these two regions, we really see a movement away from your standard feedstocks that currently exist in the market towards your more diversified feedstocks, not just from a technology perspective, but then also from a public-private perspective. If we take a look at, I don't know, Jean has mentioned a few of the different important aspects to fast-track investment within these particular regions. He spoke about the development of government subsidies. At this present time, they will reach a point where renewable power will reach grid parity and will be competitive with current technologies. However, that's not going to happen for some time now. The development of renewable power within Africa will still largely be driven through government subsidies from preferential tariffs, such as the refit tariffs and rebid tariffs. These tariffs, however, need to be structured in such a way that it's not potentially damaging to the market in the long run. We see in Europe at the moment, with the current economic recession that's ongoing within that region, we see large strain being taken from PV developers as well as wind developers, in the sense that government has cut down on subsidies, which has obviously dramatically impacted on the downstream, or rather the upstream market of that industry. We don't want to reach a situation in South Africa where we develop this market to an extent, and we develop manufacturing capacity and assembly capacity that at some point could potentially be damaged through a glut in economic growth. Above and beyond that, we've spoken a lot about the development of joint ventures and public-private partnerships within the market. I think it has been, throughout the course of the day, particular focus has been placed on the development of policies and structures that allow for greater control and penetration of your PPPs within the energy power market and within the infrastructure market. So I'm not going to elaborate too much more on that. From South Africa's perspective and from a African perspective, the transparency within the market is extremely important. Jano touched on it just now when he spoke about the clarity with regards to subsequent rounds from what's colloquially referred to as your rebid rounds, your refit rounds going ahead. Greater clarity with regards to, from a long-term perspective, taking a look at the percentage of allocations that could be awarded to your RPP market as opposed to be developed from Eskom. The IRP is fantastic in identifying the allocations for technologies going ahead with regards to your wind, your PV, your CSP, as well as your coal and nuclear power. However, there's no indication with regards to what allocation of that is going to be targeted towards your private sector. So greater transparency and clarity within the market, within the whole of Africa, not simply within South Africa, will certainly work more towards development of the renewable energy sector going forward in the market.
Doing business in Africa, you can't afford to be without Africa Investor.